Good morning. I'm Mike Lee, mentor of the Momentum Chat Room.
And I'm Jill Malandrino with The Street, and together we bring you the Morning Call Express. Markets sold off yesterday following Bernanke's speech. Futures are down a bit this morning. Europe is trading off, but we have a lot of economic data going into today's trade, particularly a forward look into retail sales. Analysts expect some good momentum in the auto sector. Mike, how are we lining up trade today? Are we going to see some momentum continuing to the upside, or do you think we're going to digest a bit today?
I think we're going to digest. Yesterday's afternoon wasn't the best action, in my opinion. After the Fed, we had a little rally. As Bernanke spoke, and he kept speaking and speaking, we started to sell off. I do think the SPYs have to close above 144 on a day chart for us to continue higher. In the meantime, I'm looking for some digestion and maybe a fade to the downside.
Yeah, well, it's definitely a headline-driven market, and that's something that we have to look out for, at least going to the end of the fiscal cliff and into Q3. But setting up for trade today, let's take a look at the SPYs and see what levels you're watching.
Sounds good. The SPYs yesterday, on the daily chart, I'm going to show you some daily charts. We had a topping tail yesterday. Yesterday's high was 144.50 area after the Fed announcement at 12:30. But while the afternoon progressed, we started to sell off, and we cannot close above 144 yet on a closing day on the daily chart. So I'm looking at resistance. I'm looking at resistance from 144 to 144.50 with a potential trade back down to 143.
Okay, moving along to the sector spotlight, we're going to take a look at the ags, and this is a theme that Scott and I have been really focused on for 2012. We expected the first 3 quarters to be really volatile, and that's how we traded around them. But going into the end of the year, that's where we look for that cyclical bid, and we're seeing it in the price action in the charts. Let's quickly take a look at the MOO, which is the sector ETF. We're positive on it on Real Money. We saw Goldman Sachs come out yesterday, positive on Mosaic and Potash, negative on CF, and we'll get into those names in the long call version of the morning call. But let's look at MOO right now.
Okay, MOO on a technical trade made a 52-week high yesterday, but with a CF downgraded and putting pressure on the sector, it's going to be tough to trade above that and to hold a 52-week high. And as you can see, it could not. So right now, I'm looking for the MOO ETF, the ag sector, to probably consolidate a little bit at highs, try to form a bullish flag, a pattern that could, propel it to go higher.
Right.
If you look at CF yesterday, when you see a big down bar that took out 10, 12 trading days, it's going to have time. It has to have time to control and to digest that move.
Right, which is something like we saw in Mosaic about a week or two ago, how we saw that bullish flag and how it took off from there. And again, we'll look into that chart when we get into the long call version. Let's take a look at GLD. We're going to measure the temperature of some of the more macro markets, including the dollar and some European ETFs as well. GLD, what we're looking for here is whether or not it's going to take off following the fiscal cliff, or if we're going to see some consolidation, because some traders are questioning the sustainability of the move.
Yeah, to me, GLD, I've been looking at it, as a trader on occasion, but I cannot find that great pattern right now. It is really in a choppy, volatile range intraday, but it's not going anywhere. If you really look at this chart, it had a little gap fill, and it's consolidating between 165 and 168. And I think, for the rest of the year, it might be in that type of trading range where you see a day it's up 50 to $1.50, and then it's down $1.50, and I think that's the way to play GLD. It is forming a wedge. I do think below 164 you have to be careful, and I do think above 168 it looks pretty good.
Okay, and let's wrap up the Express call with everyone's favorite name to trade, Apple.
Okay, Apple. As long as Apple stays below 555 on the daily chart, I do think this is continuing a bearish wedge. As you can see, it is forming higher lows and lower highs and all that kind of good stuff for a trade. I do think Apple below 520, 518, you got to be careful. 505 was the low for the previous pivot. And above 555, this thing could go back up to 580, 590 by the end of the year.
Right, which I agree with you too, because you're going to get that holiday 2012 bid like we've seen in some of the other retail names. That's it for the Morning Call Express. Catch Mike at the end of the day and the rest of the T3 team as they wrap up the charts for us on options profits, Real Money, and T3Live.com.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.